In today's video, I'm going to teach you how to write off Stock QuickBooks Desktop. By the end, you'll know exactly how to record an inventory write-off as an expense so your books reflect lost, damaged, or obsolete stock accurately. Start by opening QuickBooks and heading to your main dashboard. From there, create a new transaction and choose Expense. Think of this as logging the cost of the stock you're removing from inventory, so it no longer shows as an asset. At the top of the expense form, click into the Payee field. Select a payee called Inventory Write-Off if you have one set up. Using a dedicated payee helps you filter and review these transactions later. Consistency here makes reporting much easier. Next, choose the payment account. Click the account drop-down and select cash or whichever operating bank or cash account you use for day-to-day expenses. This tells QuickBooks which account is funding the write-off. Move down to the category details area and click into the first line. Start typing inventory to search your chart of accounts, then select the appropriate inventory account when it appears. Different companies post write-offs to different accounts. Some use inventory, others use an expense such as inventory shrinkage or cost of goods sold. So follow your company policy or check with your accountant if you're unsure. In the description field, type a clear note explaining what's being written off and why. Include details like the item name, SKU quantity, and the reason such as damaged in transit or expired. A precise description builds a clean audit trail for future reference. Now click into the amount column and enter the dollar value of the stock you're writing off. If you're removing multiple items, you can repeat with additional lines, one for each category posting, keeping the total equal to the value being removed. Before saving, scan the form for accuracy. Confirm the payee, payment account, category, description, and amount. If there's a memo field at the bottom, add a concise summary, like write-off of damaged widgets, to make it easy to identify on reports. When everything looks correct, click Save and Close. QuickBooks records the expense immediately. You'll see the impact on your profit and loss and the related balance sheet account based on the category you selected. A few tips as you wrap up. Attach any supporting documentation, like photos or a warehouse report, to the transaction for backup. Keep write-offs timely to prevent overstated inventory, and review your reporting after saving to confirm the results align with your inventory counts. That's it. Your stock write-off is now properly recorded.